People are optimistic that Mark Carney is at the helm, but obviously people are still skeptical just given how many years of federal delays we're seeing here. But the real risk is that Canada will fall behind the US, the UK, and the EU in all of its fintech, advancements we've been making. Obviously, firms like Wealthsimple are trying to push as hard as they can, but we need change now or else we're going to fall very far behind.
It's the confusing signals that it's the unpredictability of the White House, really, because they're looking at traditional economic indicators that are leading one path. And then you have this big volatility of what the hell is this guy doing? And it's causing the Fed to kind of just sit back and go, you know what? Before we go in one direction, we got to see this thing here playing out a little bit. So it's causing confusion there, and it doesn't help when Trump continually talks about replacing Powell as well, too.
All right, John, welcome back to the tank. Lots to go through. Feels like the world is on fire.
Yes.
Holy moly, John. We got so much to talk to. I don't know where to start. But let's start with maybe some of the G7 stories coming out there. There was a bunch of commitments made towards quantum and AI growth, obviously during the G7 summit in Kananaskis, Alberta. I can't believe I said that right.
That was amazing. Wow.
Pretty good, right? All right. So for those listeners who aren't aware, because there's so much going on in the world, the leaders of the G7 countries met up in Alberta to talk about some of the forward-looking ideas in the world, including technology, investments in quantum computing, artificial intelligence, and critical minerals. Obviously, G7 countries come together at a summit every year, and they kind of bring together this vision for where they want the future to be for themselves. And AI and quantum were at the forefront, John. As well as more public-private investment ideas. So did you take anything significant away from this besides maybe the, $22.5 million over 3 years for R&D and commercialization, which feels like a drop in the bucket?
Yeah, I mean, let's start off with the good news. At least, people are listening, and at least we're talking about the big things that you and I have been talking about for I don't know how long, and how frustrated we're getting that people didn't see the big picture. So that's the good news. So the question still remains is the execution of these things. There is a lot of different priorities, and again, focus in on the things that will actually move the needle. The big question is, it is easy to throw a lot of money at problems. I mean, frankly, that's what we did for the last decade. But really understanding the strategic execution part, it still remains to be seen from my perspective. But I remain optimistic and hopeful based on the topics that we're discussing. But I'd say over the course of the next several months, we'll really see, will we be moving in the right direction?
Yeah. So like you said, it's good things we're talking about. Execution is all that matters. They've launched this G7 Gov AI Grand Challenge, Rapid Solution Labs to embed AI in government, the creation of, I love this name, GAIN, the G7 AI network to connect projects and share open source tools, as well as ideas to support more small, medium enterprises via an AI adoption roadmap and infrastructure. Canada said they're committing $185 million, mostly through this AI growth fund. Who knows how that's actually going to be deployed. The really big thing, though, was energy. Like, I want to know where the energy commitments are really being made here.
Because the big one, like, again, you've heard me about this before, right? We're nibbling at the corners when we talk about, these barriers on interprovincial trade. I keep on asking folks, explain exactly what you would change and how, and what the dollars are associated. Yet, the topic of energy, which is the single biggest item that will actually move the agenda, it's still in kind of platitude discussions. And I do worry about that because it is fraught with the political challenges, whether it be from environmentalists or indigenous or whatever pound of flesh a particular province wants to get. That's hard stuff, but that's what really moves the needle. And again, the right general platitudes are being mentioned, but that execution, if it was so easy, we would have done it. It's not easy. And
Nope.
that's probably the biggest topic that I am particularly concerned about.
Yeah, I mean, listen, John, our next podcast coming out in a few weeks is going to be with one of our guests, Ryan Manucha, who is an expert on interprovincial trade barriers. So we have a great talk on that. So stay tuned for that coming out in a couple of weeks. But you talk about sort of energy, this $10 million fund on submitting AI energy proposals. Like, if we really want people to come up with great
The,
energy proposals,
yeah, these,
$150,000 subsidies is just not going to cut it.
I mean, yeah, no, I know. Like,
Let's,
we're talking pipelines and export and
right.
diversification of our exports and import substitution. Those are the big things. What are we going to do and who are we going to contract with and how do we get them into open waters? I mean, it's not that complicated from a solution perspective, but how the hell are we going to execute that? That's complicated, right? Those are the big questions,
Yeah.
right? And yet, when we focus on much smaller things, I'm not saying they're not important,
No.
but like any good business, you only have the capacity to execute a few key things.
Yep.
Strategy is all about what you don't do. Because if you had endless time and resources, of course you do everything possible, but that's not the world that we're in right now.
No, and if it may sound like we're groveling at some of these things or nitpicking, it's not that we are. It's that we're talking about the true facts of what really matters to people and what will actually be seen in the real world, not some of these just headline things, right? I think what we need, John, is a big, beautiful energy bill. BBEB. That's what we need.
Yeah,
Okay.
yeah.
All right. Moving on, though, we had the open banking back in the headlines
Yes.
again. Progress is what the headlines say, but still no timeline. At this week's Open Banking Expo in Toronto, Commissioner of the Financial Consumer Agency of Canada gave a fintech leaders a kind of cautiously optimistic update on the country's open banking rollout, but really stopped short on giving the timeline really needed to
Right.
hear it. They're talking about accreditation systems, so new rules will ensure only trusted entities can access consumer data. Consumers will see a logo-based visual identifier showing which firms are certified. Some of the rules and safeguards are being talked about, but really they're not saying when this will be passed, right? And that's the biggest thing. And on a side note, friend of the pod, Anthony Lacavera, finally got approval on his
Yeah.
acquisition,
Huge.
which I thought was really interesting. Maybe this is opening up of the world of open banking, going at it on his own way.
Yeah. I
Right?
mean, but
Wealth One Bank of Canada is what he bought. So people didn't know. Wealth One Bank
right.
is a federally approved bank with a Schedule One bank license. They have about 500 something million in assets, mostly from Asian, clients that are focusing through mortgages. But they bought the company. I think it was like 58 million bucks or so for a 60% stake. So maybe this is the start of something new.
Yeah, but the open banking promise, if I'm correct, it was 2018 that it was promised. 2018. So we're 7 years in, like something like this, right? And I know some folks will say, well, what's the real big deal? Well, again, it's such an easy thing to do. uh, we the draft legislation was all there. All of the working groups are there. Let's not have another series of discussion. Just say we're going to do this, boom, and unleash it. So those are the sorts of actions that I think people are hopefully expecting, because again, the lack of clarity is making people kind of say, well, here we go again. We've been promised for 7 years, and now here is even more delay. So I hope that some action actually happens.
Listen, Consumer Driven Banking Act was passed last year. Implementation is really slow. The real-time rail payments meant to boost transaction speeds and cost efficiency is now pushed at least to 26. People are optimistic that Mark Carney is at the helm, but obviously people are still skeptical just given how many years of federal delays we're seeing here. But the real risk is that Canada will fall behind the US the UK and the EU in all of its fintech, advancements we've been making. Obviously, firms like Simple are trying to push as hard as they can, but we need change now, or else we're going to fall
Yep.
very far
Yep.
behind. Switching gears here, John, let's talk about the partnership that was struck between public and private sector. Cohere expands its public sector partnership with Canada and the UK and government deals
Mhm.
that was announced earlier this week. So they're talking right now a partnership that will help transform Canada's government with using AI. They're going to collaborate with the Canadian AI Safety Institute on AI risk and safety, as well as building these cutting edge data centers in Canada, backed by obviously the $240 million federal investment that we talked to on a few episodes ago. So, what are your thoughts here on these MOUs that were signed with the UK and as well as the Canadian government and Cohere?
Yeah. So there's two key uh, uh, great results there. Number one is uh, government procurement as a tool of economic development. We've been saying this ad nauseum for I don't know how many years. Knock it off with the foreign company handouts and the foreign company procurements unless there is no Canadian otherwise solution that you need. And here you have Cohere, and what's good for Cohere will be good for Canada from that procurement perspective. So huge kudos on that. The second part of it I thought was interesting, and this is what Minister Evan Solomon said. Where did we spend so much of our energy over the last few years on AI? The regulatory framework, right? The truth of the matter is, no one really knows. And here, what the minister said is look, let's focus in on the development of the technology because no one really knows where this thing is headed and stop trying to throttle it so early. Even the EU has realized that they were throttling it before it was even developed. And, the US and China were going, okay, great. We're going to let it go unleash it. Now, I'm not a huge proponent of zero guardrails, but for God's sakes, don't snuff it out before the development. So that to me was a very significant shift from the previous government administration.
Yeah, you're talking about the regulatory rainmakers in the EU that just let it rain down on regulatory fees and demands paid. But let's focus on the positive. You're right. There's areas of AI adoption in government services, advancing AI talent and security. Focusing on defense use cases and policy development. These are all
All
great
great
things
things.
that I think we're not just talking about pilots now, we're talking about real
Yep.
deployment. And that's what we need to see more of. This, positioning of public-private AI powerhouse, is really important. And I'm glad to see that a Canadian company at the helm, Cohere, is obviously leading the charge here. Sticking with government, though, John, the Fed holds rates steady in the U.S., signaling 2 cuts in 2025 with inflation still lingering here. Right now, they're holding the line at 425 to
Yep.
450, projecting 2 rate cuts in 25, but they're warning about a path to lower inflation may take years.
Yes.
I mean, this is a crazy uh, kind of tug of war between the Trump administration and the Federal Reserve here because I don't understand why they have not cut. I really don't. The numbers are showing real strong, stronger than they thought, and they still have not cut. What do you think the Fed's hesitation really is benchmarked on? Because the data is not lining up with what the Fed is saying and doing.
I think so. If you read Powell's comments a couple of days ago, it's the confusing signals that it's the unpredictability of the White House, really, because they're looking at traditional economic um, indicators that are leading one path. And then you have this big volatility of what the hell is this guy doing? And it's causing the Fed to kind of just sit back and go, you know what? Before we go in one direction, we got to see this thing here playing out a little bit. So it's causing, I think, confusion there. And it doesn't help when Trump continually talks about replacing Powell as well, too. So it's just bizarre, this tension between the government and the Fed.
Yeah, but John, like this wait and see approach, didn't they learn their
Yeah.
lesson in early 2022 when they kept rates at near zero way longer than they needed to in response to the COVID-19
Yeah.
pandemic? This was a period of historically low rates to support an economic
Look what it
recovery,
triggered.
okay?
Yep.
And look what it triggered in 2022, 2023. They learned their lesson. They learned their lesson, I thought. And now they're not learning their lesson because again, like every basis points, right? $300 billion in savings to the interest rates on the US treasuries is something that we're just like looking over
Yeah.
as nothing to scoff at. The fact is that they definitely can lower the rates, and we know the data that they are looking at. Everyone else is looking at better data, and they're
I
saying,
expected them to lower the rates, and what I don't know is is there a fear that by lowering the rates the US currency is going to drop even further? Like I don't understand the ramifications of their concern, or is it going to fuel inflation is what they're thinking, but I don't know.
yeah,
There's a lot of softness in there. So
okay.
I would have
Look,
expected a couple of rate cuts myself.
Traders are betting on a September 16th to 17th as the next window for a rate cut. Obviously, the markets mostly shrugged this off.
I
I
know.
mean, look at the stock market. It's unbelievable right now, holding most of its gains. Bond yields are nudging a bit lower, but this has gone on a lot longer than I thought, given the data that we're seeing. So we'll have to see what happens at the end of the summer, John. Keep moving through the roster here. This story around Meta and the deals they're striking out there are quite astronomical, to say the least.
Yes.
One, you saw obviously Sam Altman and his brother Jack had a podcast that I love how a podcast between two brothers makes shockwaves around the world, between CNBC and all the other business news networks where they can't get this data. And he drops the bomb that, Mark Zuckerberg is dropping $100 million, bonus
Signing
packages,
bonuses. It's
signing
insane.
bonuses to get research talent out of OpenAI. And I love Sam's response. He's like, go ahead, offer that kind of package, but you're setting the wrong culture
Yeah.
precedent for people to come and work here. But hey, look, it's Zuck's money. He does what he wants with it. And he just made another big bet, investing $14 billion for a 49% stake in Scale AI. Also luring the founder, Alexander Wang, to join Meta and lead its AI efforts. I mean, these are big payouts, big numbers, limited control, obviously trying to avoid some of the regulatory stuff as a non-controlling stake, triggering these liquidation preferences. So, if there is a sale, Meta gets paid back first. And then there's going to be a dividend that gets paid out now to investors in Scale, which is also quite nice. So like there's just a lot of money sloshing around here. What are your thoughts on these kind of catch up, buy your way into sort of like the top 5 player space versus building real technology?
Well, that I think it's exactly what you just said, these catch up strategies. I think Zuck is still hurting over his horrible bet on the metaverse. You and I had talked about uh, we were both clueless and not understanding where he was heading. And the fact that they still haven't shut it down, and I guess now, even that announcement with Andrel's Palmer Luckey and somehow still supporting the metaverse. But I think that it became such a joke and it sort of took the shine off of Zuck. Zuck is trying to recoup the absolutely lost time and trying to become an instantaneous player. Llama is not hitting it out of the ballpark despite them, going the open source standard. So this feels like, again, maybe he thinks this is the next what's up uh, opportunity, but it feels a sign of desperation of relevancy, so that people talk up Facebook as being at a leading edge. But man, oh man, I didn't see those moves coming.
Honestly, if you listen to Sam's talk around what OpenAI is going to act like in terms of the anti-Facebook, in terms of like no more doom scrolling, only giving you like positive knowledge and information and responses to things you want to see rather than shoving all of this
Yeah.
content that you don't want to see and doing this doom scrolling thing. I would be scared too if I was Zuck. I think there's a huge risk that they displace, what Facebook has in terms of what society ends up wanting because of the way that OpenAI is kind of designed to make you smarter and give you more access to information. He's even flaring around, going around as articles and the information came out that he's in advanced talks to hire prominent AI intelligence investors like Nat Friedman and Daniel Gross to lead AI funds and buy their venture fund.
Yeah.
So there's a lot of weird things happening for these kind of catch up strategies if you're not in the top one or two. And speaking of being in trying the top one or two, Elon Musk's XAI has quoted as burning $1 billion a month.
That one
as it
shocked me. The amount of that, I had no idea. I thought I would have guessed $1 billion a year, but that was really excessive because he's back out again, trying to finance again.
is trying to raise 9.3 million in debt and equity.
Billion.
Obviously, reports are coming out from 9.3 billion in debt and equity from Bloomberg, and plans to spend more than half of the sum in the next 3 months. The company has told investors it expects just 500 million in revenue this year, really focusing on building out these costly supercomputer centers in Tennessee to catch up to competitors like OpenAI. But some people still think that XAI has an advantage over a lot of its rivals, because of its merger with X, its social media platform. It gives access to a lot of user posts and other information to train their models. So there's so many different avenues people are trying to take to be at the forefront of this race.
Yeah.
And the capital that's sloshing around out here, man, it just feels like we are in a full paradigm shift of what capital people are underwriting for and how long they'll put money in the ground and wait for it to come back because they don't want to miss out on this next revolution.
Yeah. No, it's FOMO has always been in the investment game, but I've never seen such a barbell where so much money in so few companies, almost nothing in the middle, and then a bunch of small checks at the early stages. And if the bet is wrong or significantly delayed, boy, there's going to be a lot of investment loss here. But yeah, the numbers just keep on coming.
John, I mean, I don't want to call you out, but you shat on CoreWeave pretty hard.
Oh, it's a shitty business. And
own it, John. It's up 350% since IPO.
I blew it on investors talking it up, but man, and that yet there's still folks out there that are just calling the investors so short-sighted.
John, I don't think people understand how fast these post-IPO moves are. Circle, which only went public on June 4th or 5th or something like that, like 10 days ago. 10 days of trading, it's up 550%.
I know, it's incredible.
5x in the public markets between Circle and CoreWeave. That's insane moves in a month for a post-IPO investment. Yeah. It's just crazy. Yeah. And then bringing all this back home, though, John, your friend Peter Walker from Carta put out their Q1 2025 VC fund performance data. Let's dig into some of the numbers here. So the big headline, DPI is still scarce, but TVPI, total value paid in capital, is showing some life. Carta's recent data that came out on the VC industry is basically saying that on the DPI side, only 37% of 2019 funds have any DPI, and just 30% of 2020 funds have returned any capital to LPs by the end of Q1 25. I'm proud to say we are part of the fund that has returned capital from a 2019 fund, showing top decile returns for that first fund. But again, those are smaller funds. They're saying in 2020, 25% of funds were sub 10 million, was the kind of raised capital. 42% of 2024 funds fall into this range of like kind of sub 100 million, and the rest are 25 to 100 million. So the numbers are quite stark in terms of capital being raised. And there's a ton of funds that are sitting with some decent TVPI, but are still not seeing that convert into DPI. So what are your thoughts on this? And did you see the report?
I haven't gone through in the details, but one of the comments that a large capital pool said to me a few weeks ago is, especially if you're 5 years or less into the fund, he called bullshit on the DPI where capital pools are complaining about it. That is a mismanagement of the capital allocations. by many of the large capital pools, where some of them just went, you know, crazy and deploying too much capital to too many funds and wasn't really thinking about, the timing of cash flows. So, you made mention of going back to 2016 or 2019. Once you start getting into the 6, 7, 8 years, the DPI should be starting to show up. But I'd say, uh, on these first 5 years, particularly on early stage ventures, I do think there is a over indexing of the importance of DPI.
Yeah.
Focus in on the IRR. And the interesting thing about venture as compared to, say, private equity, venture has returns that start off actually very, very high. Once you get through the J curve, it usually shoots up. And then over the course of time, there's an atrophy. So the key is getting your IRRs up high enough, because you're going to come down. In private equity, it tends to just keep on going up because the valuations are predicated on earnings, and the earnings
Mhm.
will increase, or the EBITDA will increase over time. So those are two very different models. Now, if you're in private equity, you will expect a sooner DPI. But if you're in venture land, I think allow the VCs to really hit some of those out of the ballpark, and it will mean that there's not going to be any cash return for it
Mhm.
first 5 years.
Yeah, I agree. I think obviously, like in our first funds, the TVPI really started to take off in years three,
Okay,
four, and
so
five.
three. That's
Yeah, and DPI, just happened to come out early, which is not a signal, but it's also a great de-risking of sort of the fund's value. I think the most important thing at early stage when looking at a fund's 5 years or earlier is actually looking at their percentage of ownership in their breakouts. If you own a good percentage still of your breakouts in the fund that got you through the J curve, and they're now at series B and beyond, that is a good indicator of whether or not the fund will have some pretty breakout returns. IRR really hard, especially if like earlier funds don't have access to
Yeah,
capital call lines. They kind of live hand to mouth in terms of the deals they do. So I don't know if that would be the biggest indicator IRR, but TVPI and sort of
yeah. It's
ownership
it's
of
the
breakouts are
multiple.
the
It's
best.
the it's
Exactly.
the multiple, and just like you had said, is if you have a high enough ownership stake and there's an opportunity to take some chips off the table to at least get the capital back and then float the rest, that's wonderful too, because at least what ends up happening is you throw some of that capital back, put it back into your investor's hand, and they will gladly put the capital
Exactly.
back into your next fund. So
That's happened for sure.
that's
I totally
I
agree with
remember
that
you
model as
asking
well.
me this a number of years ago
Yeah,
when you were faced with that. Was exactly because it shows you know how to generate a little bit of cash. Still go for the big enchilada multiple, but
yeah.
at least it just shows that you know how to make money.
And that consistency, I think, is why some of the bigger guys, you're a big fund in Canada. Like people recognize that you have consistency and the ability to return capital
Yes,
and also manage that LP GP relationship
yes,
really well for perpetuity, which I think a lot of LPs now are really appreciating in this time. So until next time, John, thanks for joining us in the tank.
great. Thanks, Matt.